you have connection with them, then you can market them investment opportunities because they are actively participating by voting in what the money is going to do in that club.
The club is set up for a specific purpose, just like, a syndication or a fund, a deal that's going to be run through a fund. There is a prospectus. So they're joining the club that is meant to be for that venture.
If I go and make money with their money, technically they're supposed to receive the profits and then we're just splitting it or however I write it up.
AI follow-up and AI lead management, that's really solving a problem inside our real estate business.
The opportunities are dirty because they're not coming to me clean the way they're supposed to come and everything else. So if I can get AI to do that piece, dude, that's 50 grand a year I'm spending on just that one service.
TV has always given us the best leads. It can kind of drive you crazy sometimes because you have a week where it's super slow and we can't figure out why, and then the next week it's strong.
TV crushes. I was actually just looking at it because I was on a call with Noah and he was asking me what the average deal per source was, and I saw that on TV our average fee is $50,000. I'm like, that is crazy because the other one is like 17. I mean, that's our normal.
All right, welcome everybody to today's mastermind panel. This is Real Estate Masters Inner Circle Mastermind Panel, brought to you by 10X TV as well. And we have 3 handpicked real estate investors here that we are going to mastermind with. We're going to talk about markets. We're going to talk about marketing, any changes that anybody's doing this year to adjust with what's going on, and just dive deep into businesses and see what's working with these investors and what may not be working with these investors, and see if we can maybe help them and in return help you guys as well. So I did some math here before I started recording, and between the 4 of us, we're doing shy of 1,000 deals a year. I think it comes out to like 800, 900 deals a year. So lots of experience in this group, and looking forward to diving in and seeing how we can help each other and also help people that are listening in. So for those that are listening in live, welcome. Appreciate you guys being here. And looks like we have Scott, Mo, Kelsey, Grace, and I'm sure we'll have some more people jumping on here. And if you're watching this on YouTube, we'll repost this to YouTube and in our community. So if you're part of our community, this is in our Go High level in the back end, as well as hundreds and hundreds of hours of calls like this that you guys can dive into. And if you want to join us live, just email me at tony@prohomebuyer.com and we can get you access. So, all right, guys, panelists, you guys ready to get rolling?
Yes, sir.
All right, let's do it, man. So let's do some quick intros. If you guys just want a quick, your name, which we've got on the screen here, but name, where you're from, what your specialty is, and then anything else you'd like to just at a high level talk about with your business. So Dakota, get us started off.
All right. My name is Dakota Bailey in Fort Wayne, Indiana, representing the Midwest. And we're doing we usually sign around 330 contracts, usually have about a 70% close rate. And my background is actually sales. So I started off in car sales, transitioned after reading the book Rich Dad Poor Dad into real estate, acquired some rentals, and I joined Ryan Pineda's program 2020, switched to building a business. It was actually the flipping and wholesaling business that we have today. And now we're here. So,
which is where Dakota and I met. We met at a Ryan Pineda event. So get yourself around high level people in different rooms and things happen. Brad, I met him at an event as well. Investor Fuel, if I remember correctly, right?
Yeah, that's right. That's been a few years ago, 19 or something like that. Yeah. So my name's Brad Bone. I live in California. We work in Jacksonville, Florida. That's our market for real estate. So my brother and I are owners. We've been in the business since 2015 and have done everything: rentals, flips, wholesales, novations. We've kind of gone full circle. We're back to mostly wholesaling now. We do a few novations as well, but gotten back to kind of simplified our business, gotten rid of the flips and just went straight back to wholesaling. So that's been working well. Actually scaled back on novations too, just to kind of get rid of the complication of trying to train acquisition guys on how to think about that. Just get them deep and let's sell them quick and let's do it that way. So that's what we've been doing.
Well, interesting you say that. Dakota, before we hit record, said he's scaling back his flipping operation and doing more wholesale. So I'll bring that up and see why you guys are doing that and see if we can help people see why you're doing that and how it's making your businesses more efficient. So cool, man. Good stuff. All right, Mark, how about you, bud?
Mark Fansler, obviously. I'm out of Wilmington, Delaware marketplace. I own a collection of companies and I focus primarily on the commercial mixed use side. We do some residential, but I've gotten away from it because my previous life and corporate life, that's all I've been involved in was mixed use projects. So I felt a calling to get back to it. So that's where we are. I own a couple real estate funds, a capital club, the national investment companies and Vincent Assets. We invest in commercial mixed-use ventures across the country, land development deals, adaptive reuse, failing ventures, that kind of stuff. I have a Vincent Associates, which is a realty division, a realty company that owns a commercial division and a residential division. So we have advisors and agents in there that are brokered by eXp Realty and eXp Commercial. The realty side, we're in Delaware, Maryland, Pennsylvania, New Jersey, North Carolina, and Florida. Commercially, I have a commercial license that allows me to practice nationally and a business broker license that allows me to practice nationally. So we're representing not just my own acquisitions, but clients across the country, not regional, national clients. I have a property management company with a partner that's here in the Northeast. We're in Delaware and expanding into Maryland and Pennsylvania as we speak, a maintenance company that's doing the same. I have a steel building company that produces steel in 13 states. I bought that company predominantly to provide steel for myself at cost for my own ventures, but we provide building packages for developers around the country. Painters Properties, which was one of my original companies that was originally exclusively a wholesale business, but I've turned it into a marketing company and it markets to 500,000 properties a month for the purposes of acquiring commercial assets. And then we just launched a high ticket consulting business for people wanting to get into commercial mixed use ventures. That's M. Vincent Mixed Use Mastery. It's an international platform that we mentor people through the transition into commercial real estate, protect them from themselves until they know a little better. So we invest, nationally is my thing.
So that's it. That's all you do, Mark? Nothing else?
At the moment, until
Jeez.
somebody shows me something else I need to get into.
Awesome. Well, that's what I love about these calls is you get such a diverse group. I mean, anything from residential to commercial to business owners. And actually, Brad and Dakota also own other businesses as well, helping other real estate investors. So every one of us here not only invests in real estate, but also owns other businesses. So good stuff. And I forgot to mention, Brad, you live on the West Coast, but invest on the East Coast.
Invest on the East Coast, right?
Yeah.
Yeah. Cool. Awesome. Good stuff. All right. Well, let's start with the topic that you guys kind of brought up, and that's shifting a little bit more from flipping properties to wholesaling, right? And I assume that it's because you want to streamline operations and not have so many things in the works. I'm predominantly flipping. I wholesale almost nothing. Like in the past 26 years, I've only wholesaled, I think, 3 properties and wholetailed probably 15 to 20. The rest of them I've closed on. I just like that model. I like not having to find buyers for the properties. I like closing on them. That way I can either flip them and increase the profits on that compared to a wholesale, and then also be able to keep them as rental properties if I want to and save a lot of money on taxes. That's my big thing right now, is just holding as much as I can to be able to save money on taxes. So Dakota, Brad, jump in. What was your reason for kind of scaling the flipping back and going more to wholesaling, and how has that transition been so far?
I'll let you go first, Brad. I got a different story probably than what it might seem like. So
Okay. Yeah. I think for us, a lot of it was, first of all, just making things simpler overall. So and part of it is when the market changed a couple of years ago, interest rates went up. We had a whole bunch of flips out there. So it's a little bit of that, trauma probably. So it's probably a little bit of an overreaction from that. I didn't want a ton of deals out if the market's a little bit unstable, and I think it's a lot more stable than it was, back then. But we just kind of made a decision. Hey, let's simplify a lot. Let's try to decrease our cash conversion cycle. That was a big thing as well. And let's make it easier on our acquisition guys. They don't have to, I talk more in terms of novations. We went to novations as well, which is good, but it's also a little bit complicated. So just try to scale it back. Everyone understands wholesale, how that works. You just got to get it really deep and then turn around and sell. So that's the main reason we did that. And actually, it's been interesting too, even in the past 6 months, more and more focus on wholesale versus novations has made our guys better because they don't feel like they have that other option of paying more. It's just made our guys just go deep, try to get the best deal. And we're turning a lot of those deals inside the month even, which we used to not be able to do that very well. So come into March and you can stack money up inside March. So that's the
Nice.
main reason we did it.
Cool. Now Dakota has me peaked a little bit. What was your reason for doing it, Dakota?
Yeah, so one of them was definitely the same as Brad. I mean, that's the thing that originally initiated it, but there's been a lot that's changed in my personal life, and that's really why I made the decision. I think it just kind of worked out timing wise for the market as well for it to be a good decision and why other people are also transitioning there. But for me, I just had a baby girl. She's 6 months old, and so
Nice.
yeah, it's like been just it's changed my perspective on life and what I want to do and what I'm planning on, which has already been, trying to create more free time. Because when I first got in this business, I was, 23, 24. Didn't matter how many hours I worked. I did not really care. I was just like, dude, I got a goal. I'm going to accomplish the goal. The work is irrelevant. Well, now the work is very relevant, and the time that I spend on it is very relevant because I want to spend time with my daughter, with my wife, and make sure that I'm prioritizing that. But when I got to a point where I had 49 flips going on at the same time, and that's scary for me. As I'm pulling away, the risk is going up. I own about 80 single family rentals with a partner. And so it's like, okay, we got these rentals. So I'm pretty much like really set in a way. But then this other part can drag everything down. And that's always in the back of my mind where it's like, dang, I owe these people money like that I borrow from my lenders and stuff. Never missed a payment, never had anything go wrong. But it's also there that it scares me, especially with the way that the market was. And so that fear of like, I'm going to pull away, let the COO, let the guys run the business while risk goes up. It's hard for me to want to help them scale that because as they scale it, the risk goes up and that can pull everything else I built, which could hurt me, which again, I'm okay with me because like, I'll go stay in a little house and then I'll be able to rebuild. But now I got my wife and my daughter to take care of that I'm not willing to lose what I've already got, I guess. And that's the only thing that I could see that would really take it down. So I decided to transition into a way that is more beneficial for not just me, but also for the team, because now I'll help them scale the wholesaling business to the moon. I'll go nationwide. I'll go into different markets. I'll do whatever we want. I will run that thing up because I'm not scared to wholesale at all. I'm not scared to spend 50, 100 grand a month on marketing if we need to in order to scale that. I am, however, scared of the debt that I take on for the flips and scaling that. So my whole plan this year was to launch the education business, and which is going to be then able to sell them more deals. They're going to get properties at better deals because we're going to wholesaling. Then I was like, all right, then I'll take the money from the private money lenders that have already trusted me, hopefully do like a capital club like Mark talked about, where it's like a capital investment where they already, have given me millions. Well, now we're not going to need it because we're not flipping. So I'm going to arbitrage that money, lend it out to our students, and then also do the same thing for marketing and stuff. So that's kind of what I'm planning on doing this year. It feels like I can scale it with less risk and help more people. And so that's kind of the whole plan for this year. It had more to do with my personal life, a little bit to do with the market, but in Indiana, honestly, like when you're buying properties for 150,000 to 250, it's like you can't really get that much lower. And when everybody's having these crises from like Florida or from California, or they're going to my market. So I don't see it shooting down the same way, but it's still scary to have that many flips going on while I'm pulling away from the business. So that was the reasoning of why I decided to do it.
Yeah, that's smart. I had a scare in 2019 where I had multiple things go sideways between a personal residence that was way over budget, a big commercial building that was way over budget, and then a flipping business that kind of stalled for a few months. And it was kind of the same thing. I put my family in a situation where it's like, man, what are we doing? Like, a few slow months and you've got, 6 figures a month in overhead. It's like, you can't have very many of those months before you're like, man, I got to make some changes. So kind of did the same thing and downsized. We still kept flipping, but just kind of made things smarter instead of doing things smarter instead of, working so hard. And we ended up making more money with less people. It's kind of funny how that works. So I'll be interested when you get further down the road, Dakota, if you're making more money and just way less headaches. You know what I mean?
I have a feeling.
Yeah. Cool, man. How about you, Mark? What are some things that you've done in your business that you've kind of had to shift to kind of make things where you work smarter instead of harder, and you realize that maybe things were a little bit harder in your business, and you kind of had to make a shift there?
It was on the marketing end for me. We were old school. We were doing all the traditional things that everybody else was doing. But I was solely focused on acquisitions, and I was missing a lot of opportunities that would present themselves, but because they didn't fit in the investment model, I was letting a lot of things die on the vine that I hadn't intended to be part of originally. So when I first started, I had two companies. It was the M. Vincent Assets, who owned the properties and did all the renovations with the construction management and everything that was in house, and Painted Horse Properties, which was doing the wholesaling piece. We were wholesaling properties, and I would pick and choose the ones that we wanted to renovate and keep or sell. What I was missing was, and it took a time until I got some people around me that I was able to have somebody go back and sort of analyze a lot of the data. And the thing that I realized is that for every one deal that I was chasing, I deemed be worthy to chase on the investment side, I was letting go 8 to 12 retail leads, from the representation side. I was letting go, 6 or 8 leads from the management side, 4 or 5 leads from the maintenance side. From steel building, I was letting, Christ, millions of dollars go a year on the commercial assets where people had properties that I couldn't put a deal on, and they were far enough down the development line on that I could have sold them steel buildings. And I was just ignoring all of that. And the minute I started paying attention to it, I built teams around each of those opportunities. As they began to present themselves, they immediately became profitable, and they turned into all these other businesses. So my thing is the commercial mixed use component that I'm in. It's different than the residential side. And for me, I got lucky when I got into the industry at a very early age. I just started in that industry by potluck. It wasn't by design. And the thing that I realized while I was in it is that while all of my friends that were in residential, or they were in retail, or they were in this, or they were in that as the market cycles took a whack into their industry, they were all out of work for a while, and they were struggling financially for 3 or 4 years. On the commercial mix side, I didn't have that problem. We just shifted to a different phase of the job because everything had 3 or 4 occupancy types or more in it. So for me, I didn't have that market cycle problem. It was just, if residential began to tank on a job, we would just, shift the focus off of that piece of it. Not that we'd stop doing it. We just stopped making it our primary effort. And we would focus on the next things that follow residential, which is office and retail and everything else that would be on the same site. So I didn't get caught in some of these cycles where things changed so much that I had to reimagine my business, because it was, had built-in detours all along from the beginning. The challenge really becomes for me is that the ventures that I do are long enough that I have to pay attention to the market cycles that are going to be 4, 5, 6 years out, because I have to not just come up with the highest and best use for the venture. I have to come up with the highest and best use for the venture for the market windows they're going to hit. And then I have to build the occupancy types around those. Right. So for me, the biggest challenge was recognizing the opportunities that were around me that I had ignored originally. That led to all these other companies. I have 8 of them now. 6 of them I never intended to open, just because I kept my eyes open to it. Mm-hmm. So for me, the challenge for all of what I'm doing is all about capital. And I've had to do that differently, because when I started in residential, when I first left my corporate life, I retired from 30 plus years in it and went into business for myself. The people that I was doing business with then were smaller capital players. They're individuals of high net worth, and they were willing to put a certain amount of money at risk. Now I'm doing ventures that are $60, $70 million first phase. I can't do that with the same people. And the part for me that was the challenge is I hadn't taken the same amount of time that it took to build my businesses to build the capital relationships. And that was my problem for me. So one of the things that we're doing differently for that now are these capital clubs, and specifically because the IRS laws and the SEC laws associated with the club, while they're similar in structure, are slightly different in your ability to be able to market for capital. I can't market to people that specifically that I don't know, but I can market passively to groups of people that likely have the kind of capital I need.
Want to get motivated sellers that nobody knows about? Introducing 10x TV. If you want to create credibility in your market, find deals that nobody else knows about, and crush your competition, you need to check into TV commercials. It is the new buzz in the real estate investing industry since we introduced it several years ago. I've been using TV commercials myself for the last 12 years and it's absolutely crushed it. So if you want to learn how to get on TV and to do something that little to no people are doing right now, go to claimmymarket.com. Again, that's claimmymarket.com. We usually only work with 2 investors per market, so if you're interested, reach out to us and book a call to see if you can claim your market before anybody else does. Now back to the show. So let's dive into that real quick, Mark. Are you talking about? Do you work with Fractional by chance? Is that
Fractional is one of the groups that I'm working with, right?
Yeah, Fractional dot app or IO. App.
IO, I think IO or AI or something like that.
Yeah, I think it's fractional.app. So let's talk about that real quick. So from what I understand from a club, typically you have to market, when you market to the public, you have to create a fund, a certain type of fund that allows you to market to the public. They have to be accredited investors, and there's all kinds of other things that you have to comply with. With a club, from what I understand, I'm just getting into this, is you can market for people to get into your community. Once they're in your community, which is very vague, it could just be a Facebook group, it could be an email list, it could be whatever. At that point, you have connection with them. Then you can market them investment opportunities because they are actively participating by voting in what the money is going to do in that club. Did I get that right, Mark?
Not quite. So from the fund side of it, the syndications are normal. We all know how they work. From the fund side, there are several different structures that you can use. They can be unaccredited, they can be credited. There's a capital stack version and all kinds of stuff. The challenge is you're not allowed to market, meaning you can't buy a list, skip it, and market to those investors, cash buyers. Like I have 1,400,000 cash buyers in my list across the country right now. Some of them I've done business with, some of them I have not. I can't market to that list because I don't have pre-existing history with some of them, right? I can, in the club setting, I can market on social media and all of my groups and stuff like that because it's passive marketing. They would reach out to be part of the group, the club. The club is set up for a specific purpose, just like a syndication or a fund, a deal that's going to be run through a fund. There is a prospectus. So they're joining the club that is meant to be for that venture. So there are 2 ways to do it. One for the specific venture, or one to do it under a prospectus that's to be used for that. So I don't remember whether it was Brad or Dakota when you were talking about the club, taking it, the money that you've been raising through it, instead of doing it for the ventures, using it to to fund other people's ventures. You have to change the structure of the club in order to use that money, because they committed to the fund or the club with the understanding that it was going to be used this way for your ventures, for your renovations, as long as they met this parameter, whatever it was that you had set up for yourself. Maybe they're $250,000 and under, with renovations under $150,000, and the ARVs, would produce a margin that was, 30% or higher, or whatever it is, right? In this example, if you want to take that fund that you started, the club that you started, and begin using it to bring capital in, and you're giving the people back 10% on their money, and you're renting it out at 12% with a couple 3 points or whatever, and you're taking the spread and the points. You can't do that through the original fund, the original club, because it was set up for a different purpose. So when the people jump into that club, they're thinking it's going to be used one way. You can't use it another, if that makes sense.
Yeah, I'll specify what I meant. I work directly with these people right now. They send me the money direct. I'm saying that now I gave all their money back and I don't need their money anymore. So then I'm going to create that specifically for that whole thing. But you're right, there is a difficulty, and I had to work through this on how I'm going to be able to retain the interest, or like the points, if I'm not giving them a percentage of it, but I'm using their money to arbitrage it. So basically, we found a way to do it. There has to be a middle company or middle thing, and they have to also approve the deal itself. But yeah, there are some logistic hoops
Right.
that I have to jump through.
Are you doing
Right.
it? Are you doing it as a fund? Are you doing it per deal? Or are you doing it as a club?
That one, the way that I thought I was going to do it is a club. It's not all the way done yet. This is still into fruition and how I'm going to structure and how I'm doing it. Right now, all I know is I had 49 flips. I had $5 million. Now I'm down to 16 flips. I think we have 1 million out. So I got $4 million of people who've already used it for, 6 years now. They've been lending me millions. And so then I'm thinking, okay, now I can use this, still use their funds, and then be able to arbitrage it. But again, the paperwork, the logistics, and like the voting and stuff is something that I still have to work through because once it gets into that fund, you're right. If I go and make money with their money, technically they're supposed to receive the profits and then we're just splitting it or however I write it up. But then if there's a middle company, then that's the way that we're able to kind of bypass it if we can to say, hey, this company is planning on using this to invest it toward like they're still going to know what I'm doing with it, but they're not going to receive the profits from it. They're going to receive their interest rate that they were promised.
The other piece of that, and I don't know enough about it because I don't use the capital for that purpose, is once you start using other people's money to fund other people's ventures, you're stepping in the world of brokering, and you need a different set of licenses in order to even be able to do that. So you'll have to look into that a little bit more. I know that I don't know if any of you know Brandon Brenningham. He's using fractional for that purpose.
Yeah, I know. I
Uh,
know. I know of Brandon. He's in board. Are you in boardroom, Mark?
yeah, I am. I'm going to the first one in a couple of weeks.
Okay, cool. Hopefully, we'll see you there. Awesome.
Yep,
Um,
I'm in the hot seat.
cool. So Dakota, by the oh gosh, I just lost my so there's something called a debt fund when you're doing it with the SEC or filing where you can just
Yeah,
pay a set interest rate and anything above and beyond that interest rate you get to keep. So I think with
that's right.
fractional you can do the same thing where you just tell them, "Hey, I'm paying you 10% on your money," and you just have to disclose I'm lending it to other people. And I think at that point, I don't know that you're considered a broker because if you're getting the money and you have the LLC that you are investing the money and lending to other people, I don't know that you need a broker's license for that, but I would definitely check into that.
Yeah, that's the part that I'm not in that world, right? I just know enough about it on the fund side. Some of those licenses are required just because of the SEC oversight.
Hmm.
Um, but I don't use it for that purpose. Everything I do it to fund for my own ventures.
Hmm.
And some even in the fund side, like I have a debt capital fund and an equity capital fund. I have a third one for the capital stack also, but on the debt side, they don't get voting rights or anything. The venture has to meet the criteria. So as long as I'm meeting that criteria, I'm good. I'm good with that. And I don't do, I set the standard for the investment lower than what I hold for myself. So everything that I do, qualifies. But none of them get a voting position in it.
All right, cool. Well, that was good convo. There's different ways to raise money and a lot of different ways to skin the cat. And Dakota, if you want me to, I'll connect you with that guy. He actually does
Yeah.
it. He does it as one-offs. So he will just do the promissory note and mortgage together with the person that he's doing that one deal with, and kind of splits it that way. So anyway, he can go over that with you. And like I said, there's a lot of ways to do it.
Yeah,
Yeah,
I'd be interested.
the fractional site lets you do a one-off, and it lets you pull properties together and do it under one club as well.
Hmm. Yeah, just the cost of each club, I think, would make it a hindrance for doing each property separately. So
If they were smaller in size, for sure.
yeah, yeah. All right, cool. Well, let's talk about, so everybody here owns multiple businesses. So we all started in real estate, it sounds like, and then we ended up opening other businesses. So there's the thought, the frame of mind that people say, go in and go hard on one thing and focus on that and only that. And I think that's good and true to a point. But like I mentioned in 2019, I had a couple different businesses, and my main one was kind of like skid a little bit, and I had to reset. And it was a scary moment for like 6 months, and then things were fine after that. And I thought to myself, I need to create other businesses that are as good, if not better, than this business. Ended up creating the TV media company that you guys know, and some other things. And so I'm kind of curious what your philosophy is on multiple businesses, and how you're able to run multiple businesses and still be efficient, or hopefully you guys are efficient. If you're not, you can always dive into that. So, Brad, you've been quiet for a little bit. Tell me, you've got your real estate investing business, and then you have an AI company that helps people follow up with follow-up leads. So you can kind of just talk about that a little bit and just how do you focus on both of those businesses?
Yeah, I think chasing shiny objects can be a problem, and we hear that a lot. The way I've thought about this one is that, AI follow-up and AI lead management, that's really solving a problem inside our real estate business. So that's where that came from. And so to me, it makes a lot of sense that, like, we started getting into it. It kind of naturally turned into something we could start offering to investors, but it was always something that was right in line with our main business, which is real estate. And so that's that. It always felt like the right move to do. As far as running them both, I think, sometimes you're focused on one over the other. Right now, we're really focused on RiverX just because that's growing, and we launched a new platform in December, so we're pushing that right now. But I think you just kind of juggle both of them and put your time where it's needed.
What about you, Dakota? Tell us about your businesses and how you're able to focus on multiple businesses and still be efficient.
Yeah, so the way that I thought about it is I feel as though in real estate, a business has multiple different businesses inside of that business anyway. Like you should really be running it like that. I mean, if you're like you do marketing, that probably stemmed from you looking at your own marketing and then you're like, "Oh, dang, I can do this really well," which is why you're successful in this business. And then you're able to do that for other people. And I think that's how a lot of people start these side ventures is because you're already doing that inside of your business. You can probably do it better for other people or than what they're doing. So I think of marketing as its own business. I think of sales as its own business. Project management, construction is 100% its own business. And so that's kind of the way that I feel like we're able to do it is because you're doing it already if you're running a whole real estate business. So I actually just opened up a wedding business. What I usually do is kind of funny. I usually want to do something. And so I'm like, okay, I want to do this thing. I'm like, but this thing doesn't make a lot of sense. So what I got to do is make it make sense by starting this business and have it have income. So that's kind of what happened. I was like, you know what I want to do? I want to run seminars, have masterminds, but I want to own the building. That way we can, make it really cool and be in this really cool place. And we just have it. But I'm like, but those are going to be difficult because it doesn't make as much money and like you're going to try to make it up on the back end. So I'm like, all right, I'll do a wedding business. That's going to create it, which is working to pay for that building. But that's usually how I end up into businesses is because I'm like, dang, this will accomplish what I want to accomplish end result and still make it make sense monetarily. So that's how I end up with them. To stay efficient in all of them, I would say like honestly, Sharper has helped us a ton. I know Sharper's big in Collective Genius. He's a big name, but man, he's helped us a lot to dial in KPIs, to make sure everybody's efficient, to create a more corporate structure. Because honestly, I'm not very corporate. I'm the exact opposite. I was a maverick in the predictive index, which basically means I'm going to like run all over the place and not really have a lot of structure. But I also do like to have things organized and make sure that things are set up before I go on to the next thing. So that's one thing that I see a lot of other entrepreneurs do is one business is very, very messy and then they just go and jump and then they're going to start another one, leave that one messy. Whereas I'm like, okay, let me clean this one up and then I'll go jump to the next one too. So those are just some things that we do. But I would say Sharper and the stoplight and the KPIs are the biggest indicator and tracker and just setting very clear results of like, hey, this is what I expect. This is what winning looks like. And if you can do that, and then you can say, here's your KPIs that'll help you get there. I think that's really all you need in order to be efficient at running multiple businesses.
Cool. So, Mark, you own a lot of businesses, and it sounds like you didn't mean to. By the way, your steel company, do you do buildings all around the country?
Yes, we can send design packages with or without foundations designed. You just take them, submit them. You can pull permits directly from them.
Okay, I've got a couple acres. I have a big commercial property with two acres on the back I've been wanting to build on, and construction costs kept that from happening a few years ago. So I'll get with you about that and see see how you might be able to help. So what about
Happy
you?
to.
So you have all these businesses, like how do you keep track of all of them? How do you run them efficiently? Just tell us how you keep it all together.
Well, a lot like the guys here, it started because inside the business we have the need already, right? And the bigger you get, the more formalized that department begins to become. So we're doing marketing in-house, we're doing management in-house, the renovations in-house, the sales and leasing and all that stuff we were doing in-house for my own ventures. And it got to the point it began to get kind of hard to run that under a single entity. Plus, I wanted to separate it a little bit because when it got to the point that it was running efficiently for us, and I wanted to begin to offer the services outside of myself, I needed them in separate entities for corporate protection for all the obvious reasons. And it's interesting to hear, Gary Harper and them mentioned it here today because I used them right before COVID. I had them in when it was just two companies. And Gary came to me with the same sort of MO that he did with all the other house flippers in the country. And then when he got here and figured out who I was, we turned a completely 180 and went down a different direction. So they're just awesome, those guys. But for me, it comes down to the team that's around, the people that you put around yourself, right? They all have to be better at whatever I need them for than I am myself. I don't hire just people. I want them to be the best at what they are for the particular task, because if I can outdo them, they're the wrong people, right? That's to start with. And two of my companies, I have a partner in. They're 50% partners. I have controlling interest, so I can make the decisions if we're some sort of a deadlock. But we have leaders in each team, executive management in each team. I run the companies through reports and them. They run the companies because I can't get into the weeds on everything. I just can't. And if I have to, there's a problem with the people I put in the spots. If I recognize a teaching moment, I'll go get in the middle of it, break it down into a bunch of pieces, and teach everybody there how to not have that problem in the future, just because my life's experience has given me that ability. But from the efficiency standpoint, there's always room for improvement, right? We're still doing some of the stuff old school. We really are not putting AI to any kind of practical use in my entities right now. Part of it is because I haven't seen it be good enough at it yet that I'm willing to trust it. And I'll give you an example. From the marketing side of things, I don't market each of my companies independently. I market everything to a personal brand, and everything comes in through one big sales funnel at the top. And once my sales team is on, like I have a cold call team and everything that there's 21 people dialing 800 numbers a day for me. And my challenge really is with them and getting AI to do what I'm having a problem getting them to do. If I were just a flipper, they would know exactly what to do. If I were just a wholesaler, they would know exactly what to do. But because my companies have all these secondary funnels that the original leads come through, when you get somebody on the phone, and we're calling them because we want to buy their real estate. We're not calling to sell a service or a product or any of that other sort of stuff, which allows me to get around a lot of the laws associated with that because I'm not selling a product or service. But once I get them on the phone, the conversation will turn in a different direction because the property doesn't turn out to be an investment worthy venture, meaning maybe they bought it a year ago and not 10 years ago. So there's not a lot of equity in it. The building's completely leased up. It was renovated a year ago or 5 years ago. So there's not a lot of room on an investment side to do that unless they're in financial trouble and we can get a deal. So that conversation turns into a different deal. Like, what's going on with the rest of the property? Why hasn't the rest of it been developed? And that side, I can turn it into a joint venture and we'll develop the deal. They put up the land, I do everything else. Or can we subdivide it and sell that piece off and pay your piece down some, right? The piece you're struggling with right now. Maybe the best thing for them and the best thing for me are two different things. For me, I always cater to what they need because that feeds my businesses. Maybe they need to sell the whole thing. And so each time the conversation changes, The people that my cold callers and my callers are struggling with is recognizing which bucket it needs to drop into next and putting in front of the person who can close that deal. That's the piece I struggle with the most because my sales funnels are more complex than most. I haven't found an AI that can accomplish what I wanted to accomplish it without it acting and sounding like it's AI.
Mm-hmm.
And I know that there's a Yugo version, Chevy, a Cadillac, and Ferrari version of AI. And different things get used for different purposes. I just have not found the version of itself that will allow me to train it to do what I need it to do successfully.
Yeah,
Well,
I found that too. We just tried a incoming AI service and it just sounded too robotic and it would call people by the wrong name sometimes. And I don't think it's quite good enough there for us for sure
Some
to
of
be
that
able.
stuff, like that calling them by the wrong name, is because some data that it's calling on, something's in the wrong column, so that when it's mapped, it's reading something that was meant to be somewhere else. That's
Yeah,
an easy
yep,
thing to fix.
yep, for
But
sure.
the other part of it's the complicated piece because I'm learning that you can take all of your Google Docs, all of your recordings, everything that's on YouTube, all of your posts on Facebook, LinkedIn, all the social medias and everything, and dump it into an appropriate AI platform and tell it, I want you to be able to handle all of my sales calls, take in the information from the phone call, and having learned all of what you've learned about me and my businesses, be able to distinguish in the middle of a conversation with someone, oh, this is not an investment lead, it needs to be a retail lead, or it needs to be a management lead, or this or that or the other thing. And then you have to start testing it until it's reacting the way that you want it to react. Well, the thing for me is I'm not the person to do that. I delegate everything. All I do is chase capital, relationships, and deals. That's it. If I'm not doing those three things, I'm wasting my time and money on things I shouldn't be doing it on. So I have to find the people that are capable of taking all that data and teaching the system to do what I need it to do.
Hmm.
I don't know which is the right system, and I don't know the right people to do that.
I
Go
was
ahead,
gonna say, I'm
Dakota.
curious, Brad, have you been able to solve that?
yeah, I think I'd like to talk to you, Mark, when we get a chance. But I
Sure.
think there's a so some people make the mistake of trying to get AI to do too much. Like I wouldn't have AI try to close the deal, build rapport, all that stuff. Really,
Right.
what's really
It's just to set
effective,
the appointment with the right people.
set the appointment with the right people and make that as simple as you can. And because that's really the hard part about follow-up is just getting these people engaged and getting them on the phone. So yeah, I mean, it's all about just prompting it right. It's all about prompting the AI right. AI has improved a ton, even in the past 6 months. Probably a year and a half ago, it was more like word-based, rule-based chat, and that makes a really complicated system you got to train because it's all based on rules. Well, now it can be prompted, and that makes it a lot simpler. So, and the other thing, it doesn't have to all be voice. It can be SMS and email, and no one suspects AI at all with that
Right.
if it's prompted correctly. So yeah, there's definitely some solutions we can talk
Yeah,
offline.
I'd happy to talk to you. I sent you both Facebook friend
Okay.
requests so we have an easy way to connect after this.
Yeah.
Um, but I'd welcome an opportunity to chat with you about how you've managed to do that for yourself because I agree. I'm not looking for it to close.
Hmm.
I'm looking for it to set appointments with the right departments because they're round robin, and have for the system to say, somebody from acquisitions will call you or somebody from whatever. We'll set you up an appointment. The person will be there on that day, this time, or to turn it over to a live call right now. Right.
Yeah.
That's really all I want it to do. But the challenges I'm having with the live bodies that you can train is that they'll set the appointment. You get on the phone, and right before you get on the phone with them, you're reading through the notes. And if you read through the notes and you find it's set up with the last note says they're looking forward to meeting you on such and such a time. They don't have a particular price in mind, but they're willing to entertain offers. And then you go read through the notes, and it's not a deal you should be making an offer on. It should be something that should be talking to a realtor or
Yeah.
management company, or something else. And the people, when you get on the phone with them, are expecting one thing, and you're having to, after the fact, get into them and turn it into something else instead of it coming to you the right way the first time, right?
Hmm.
So that's a challenge right now for me, especially particularly on the scale that we're running. So getting AI to just do that piece of it would be massively helpful. Because here's the deal: they're dialing, not counting, batch dialer and all the other systems that we're using, just the cold callers. I'm running on average 20 to 21 cold callers a month.
Hmm.
They're each calling through the auto dialers. They're calling 800 numbers a day, and they're costing me $2,500 every 2 weeks to run those numbers. Now, they're
Yep.
producing a ton of opportunity, but the opportunities are dirty because they're not coming to me clean the way they're supposed to come and everything else. So if I can get AI to do that piece, dude, that's 50 grand a year I'm spending on just that one service.
Yeah.
That doesn't count, the auto dialers that I may or may not need anymore and all the other stuff. So there's a lot of things that this sort of spider webs out to other cost saving
Hmm.
measures. But ideally, I just need it to do that thing because I can't find a human yet that's capable of doing it. Because if they can, they're not going to be dialing. They're going to be
Right.
owning businesses because that's the mind that they have, right?
I know Brad, yours does texting. Do you guys do dial yet? Like
Yeah.
actually live AI agents?
Yeah. We have voice now, voice, text, and email.
Oh,
Yep.
wow. Okay.
Yeah.
Awesome. Yeah, you guys should definitely sync, and I definitely need to get with you, Brad, to see how we can maybe implement that as well. So, just to kind of recap the multiple business conversation, someone mentioned, not starting another one until you have your one dialed in. I completely agree with that. I did that many times where things were kind of dialed in, then I'd kind of go over here, and I'm like, oh man, things aren't, and you can really crush your main business if you don't have the first one dialed in. My thought, and I think Mark kind of mentioned it, and maybe you guys did too, is starting other businesses. Like when I start something else, I want a point person and someone to be able to run that. So right now I've got four main businesses. They're all ran by different people, and I just kind of help from a high level view and from an advisory standpoint. And sometimes I get in the weeds a little bit on some of the businesses, but having someone run them, and like Mark said, that it probably can run them better than you. They can run
Hmm.
them better than you, then you definitely have the right person in place.
Yeah.
Um, so let's shift over to marketing real quick because marketing is the name of the game. It sounds like I think a lot of you guys have different marketing methods, kind of what's something that's working, and then some things that maybe aren't working as well. So let's talk about what's working well from a marketing standpoint. Who wants to jump in and kind of mention what is working for them marketing wise?
I
I
would.
mean, I got
I'll jump in. I mean, TV has always given us the best leads. It's weird how I noticed this with TV. It can kind of drive you crazy sometimes because you have a week where it's super slow and we can't figure out why, and then the next week it's strong. And when you look at it over the course of a month, it's usually pretty consistent. I still don't understand why it does that, but it's kind of been doing that forever. But they're consistently the best leads. They're expensive. I wish the cost could come down. But great leads. Yeah. So TV has worked. We also do PPC. PPC isn't quite as good as TV, but they are cheaper. They're cheaper leads. And so you end up getting more for the dollar spent. And it seems like we got to do more tweaking just to try to get the quality held at the right spot. But so yeah, that's what we're doing, TV and PPC.
Yeah, for us, same thing. TV crushes. I was actually just looking at it because I was on a call with Noah and he was asking me what the average deal per source was. And I saw that on TV, our average fee is $50,000. I'm like, that is crazy because the other ones is like 17. I mean, that's our normal. But I mean, I was so surprised by that. So I actually just sent an email. I'm like, all right, cancel radio. I think we might, start going a little bit more TV. So Google pay-per-click, same thing. It's been really good. Gets a lot of leads. Some of those actually come over from TV, but you don't even know that they're coming from TV, which is interesting. And then Facebook. We run a lot of Facebook ads and stuff. So those are our top three. Direct mail, surprisingly, is going down, which I don't know why. But that one's always crushed for us since 2018, and right now it's not. We're very close to turning it all the way off. So that one's not doing well for us now, which was very surprising for me.
Do you brand your postcards to your TV commercial?
That's a good question. I don't think so. We have a handwritten one. We do have our logo, and we put it like a handwritten on a Sharpie, and then like we actually had somebody's mom, like it's my old business partner's mom, like put them on a printer, and then it just says, hey, we're interested in your property. You handwrite the stuff, so it looks like it was all handwritten in Sharpie, and so it's super effective to get them open up. But that's what we've done. So I don't like have it too branded. It just has the logo at the top, but that would be good to like put like, hey, as seen on TV, put our face on there. That'd probably be a good way to do it.
Yeah, send a message to Noah. He's got a copy of our postcard that we brand with our TV commercial. It helps tie it together. And we've had many people call us and say, we called you because of your TV commercial. And we'd have either we are only calling you or we called you first because we out of the whole stack of postcards, we noticed you from TV. So,
Okay.
yeah.
Yeah, thank you.
So, Mark, first of all, the cold callers, those are finding commercial properties, right? Is there anything else that you're able to do to find big commercial deals?
Yeah, the television's the one thing we haven't done. We do, all the same stuff that everybody else does. We hit them with multimedia. I use Print Genie for that. They've been the best quality setup for us. We can set up a 4-month campaign. It costs me a little under $5 a campaign, and the campaign includes four direct four direct mailers, four emails, four texts, and a call in between those. So we're hitting them every 2 weeks with something, either a visual cue, an auditory cue, or kinesthetic sort of vibe, because not everybody receives the information the same way. So we're hitting them sort of across the board. We also use radio, billboard. Um, we are all over social media, but the thing I got to tell you that hands down has delivered me the best results has nothing to do with marketing for the deal. It's all personal brand. I spent the last 9 months getting away from 100% of my effort marketing the individual businesses to marketing Mark Vincent Fansler, so that people know who I am, because people don't want to do business with your company. They want to do business with you.
Hmm.
And what makes them comfortable with you is the thing that makes them choose your business over someone else's. Because we often are getting deals that I'm not the highest offer on. I'm getting deals constantly that, I'm charging more money for whatever it is that I'm doing than anyone else. But because they can Google my name, Mark Vincent Fansler, and find press, international press about me, media about me, awards about me. All of my ventures are online. My companies are online. My podcast appearances, the national speaking gigs, and everything else. When they search for me, no one around me in the areas that I market to have the presence that I have. And I get companies like, um, Chris, I'm forgetting their name all of a sudden. Bailey's Resorts. They contacted us when they were looking for a realty service to fill all their vacant spaces in their resorts around the country. They only called me.
Hmm.
I didn't market to them. I had no idea they were looking, didn't know anything about it. Their first job's in Atlantic City. And they gave us 3 spaces. That was all personal branding. Doing nothing but PR, and the personal branding is bringing me more business than all the other mediums combined.
Yeah, personal branding is really powerful. And I'm sure, well, I know, Brad, you're not in your market that you do TV in, but Dakota, you are. I imagine the TV commercials, you've been recognized and probably people talk to you that normally wouldn't have talked to you, maybe even raise some private money. So can you talk to the personal branding as well?
Yeah, it's funny. I have to go in 3 minutes, just so I want to let you guys know that. But It's funny because I've actually struggled with that, and I was actually questioning on that. How much do I spend on personal brand? Because even radio, it's like, man, radio, it's getting us out there, but then I'm not seeing the ROI from it. So I'm like, should I keep doing that? And it's always difficult question for me to answer. I do think it's 100% important, because yeah, there's many people that they go see us on TV, then they go research us, then they go to our Facebook. And I had many people that say, I watched a 30-minute video of me on Facebook describing how to buy a rental property, and that's why they decided to go with us. So yeah, I think it's huge. It's just a very difficult thing because I don't like to put money where I can't see an ROI or it's hard to track, but that might just be my analytical mind. But I'm trying to find that balance because it's definitely important and it's very hard to track and see, is this worth continuing to invest into? So I try to do both, but I try to do the personal brand one as cheap as possible, I guess. But like, TV ads is accomplishing both, which is pretty cool. So that's what I look more for.
Yeah, I think there's some things like I know recently, I think probably a year ago, we decided that some things we know we're not going to see an ROI on. Billboards, for instance. Mark, you may see some ROI on that, but
Sure you
billboards,
can.
yeah, you
You
can.
just assign it, you sign it its own phone number.
Right.
So
But
when it rings in, you know it's coming from the board.
right. What I'm saying is we don't have very many people that call us directly that say we called from your billboard. They may have seen our billboard and then called from TV or called from radio, but we don't really have much of an ROI from billboards. They may pay for themselves or we may lose a little bit of money, but we continue to do it because we know it's going to still build that brand. Radio
Right.
may just be the same thing for you, Dakota, is that like you may not see a direct ROI, but people may be calling you on TV because of your radio. They've been hearing you constantly in their car, and then they see your TV commercial, and then they call you directly from your TV commercial.
Right. It's actually funny that you mentioned that because I made a decision based on a recommendation from you guys that is more personal branding and I know will give us a better ROI, but I can't track it. And that's to change to a vanity number that's going to be the same across everything. I was like, oh, that sucks because now I can't track if it's billboard. I can't track if it's TV. I can't track if it's, going to be this stuff. But I'm like, I know that will help the brand because it's going to be 777 sold. I 100% know that, but it's harder to track. So I made a decision for the brand as opposed to tracking the ROI better, which if it was the right choice, I don't know, but I know that I will get more deals from it. It's just not going to know what lever to pull as much. So what I did to counteract that too, is going to require our acquisitions guys. The first question they ask is, where did you hear about us? But it's still, that's more scary to me than having the phone numbers, but I do have to go. I really appreciate you guys. I'm sorry I got to jump off like this, but thank you so much for having me, guys. Nice meeting you guys, and I'm sure we'll be in touch.
Thanks, Dakota. We'll see you
Pleasure
later.
to meet you.
Hey, you guys.
All right. We'll wrap up with a couple of questions here from people that are listening live. First of all, has anyone tried Steve Trang's AI dialer? Was told that it does all that you mentioned you needed, Mark. Brad, so I haven't tried it. I've heard some good things about it. So it not only does inbound calls and answers them, but it also, when someone fills out like a web form, for instance, it'll actually call and start talking to that person. Brad, does your system do that as well? You said
Yeah, it does. It
voice.
does. Yeah, it does both outbound and lead intake. Yeah. And it's using
All right, so let me
11 lab voices, which are like the best in the world right now. So it sounds really good.
What's the link that people can go to find
Yeah.
find that?
You can go to
Yeah.
riverxhub.com.
riverxhub.com. All right, cool. You had a question about that, Mark?
Yeah, two. The one was the AI version that the person mentioned, and then the next question was to Brad. Is the system that you're using, is there a different version of AI for each of the company's funnels, or is it answering the call and intelligently deciding which of the companies is supposed to be setting appointments for?
Well, the way ours works is you have your own AI agents that is prompted the way you want, if you want it qualifying a certain way, if you want it, however it's branded in your company. And then we can just prompt it however you want based on how that prospect responds. It pushes to a certain person. So it's very flexible in how we can do that.
All right. So just forgive me, just to make sure that I'm understanding. It sounds like there would be an AI agent for each version of a sales funnel.
Yeah, you could do it that way. Yep.
What I'm wanting is um, an AI agent that would answer all of the calls and on the call through normal conversations decide which company should get the lead.
Yep.
Right. That's the part that I have not seen anybody do well.
Yeah.
So like the
I'm,
one
I'm
so like the one I don't remember which was it. Was it the other guy that just left that had the wedding thing?
yeah.
Dakota, yeah.
Yeah. So in his marketing, he may be marketing separately, have a different AI that's chasing that lead. But let's say that it's somebody that has a piece of property that you're interested in, that you were interested in initially, and on the call you find out that it's an investor. They've got
Mhm.
40 properties. They really don't want to sell this one, and they have a need for some sort of venue space. Will your AI agent say, hey, we've got a division for that? Or, as a matter of coincidence, the reason we were calling you was for the investment, but he also owns a wedding planning company. Can I set you up on a call with them now?
Yeah. Yeah.
And switch to the other company completely.
Yes, it can do that. Yeah.
All right, because that's
If
what I
you
need.
if if you were looking into AI even 6 months ago, the advancements are insane. So
Yeah, I've seen that.
yeah.
All
And
right.
if
But
some, some
what was the individual that asked the question said, have I tried or looked into, and he mentioned someone. What was that thing?
Steve Trang's AI dialer. And then Brad, someone asked if your system works on other industries outside of real estate.
It does. Yep.
Sweet. Very nice.
Really any industry that makes money from setting appointments and doing follow-up and working a database. Yeah.
And you have left main, right?
Yeah, we do.
Okay, we just switched over to left main, which makes it probably a lot easier to integrate your service, right?
Yeah, we can integrate really with anybody that's integratable. There's some CRMs that aren't as good, but Left Main's great. A lot of CRMs we can integrate as long as you got good integration into Zapier or an API. Yeah.
Cool. Very nice. All right, one last question, and then we'll kind of start wrapping up. Someone said they flipped 6,535 houses from 1998 to now. All fix and flips are brain damage, which they can be. I'm now holding more and want to know what are the biggest challenges that you're seeing in the current market conditions. If you're talking about market conditions for rentals, I think the biggest obstacle is just interest rates are high and rents haven't gone quite as fast as prices. So you have prices that are higher, rents that haven't gone up quite as much, and then interest rates that are higher. And so that's been the biggest obstacle for us is just cash flowing the deal. But as I mentioned towards the beginning, is that I'm trying to keep as many properties as I possibly can to save money on taxes. So let's say, I buy a property, I can cost segregate and do bonus depreciation on the renovations as well. I might be able to save, $20,000 on that deal by keeping it and have the equity. And when I say 20,000, that's not 20,000 in write-offs. That's actually $20,000 in cash tax savings. And then if I lose $100 a month or $200 a month for a year or two till I can 1031 it into another property, I'm willing to do that.
Right.
So I think for me that's the biggest thing. And then I've just been worried about prices dipping. But every time I've had one of these calls or I've talked to other people at a high level, they're not worried about prices because the chances of a big crash or something happening to the real estate market as a whole is probably pretty slim. What do you guys
Right.
think about that?
Yeah, I can add to that. Um, Two parts. I'll get to the cost segregation in a second, but there's a big difference between what's happening in the market now than what was happening back in 2007, 8, 9 timeframe, right? What we're having is a little bit of a leveling. It's not a market correction. It's not a crash. It is nothing like what happened before. But several things happened at the same time before. You had the whole credit market problem, how the loans were being given out in the wrong ways, and people weren't being identified, told how the loans are going to react at a certain period of time. Builders had ridiculous amount of abundance of spec homes and houses that were already under contract but yet to be started. And at the same time, the market was being flushed with people who are wanting to sell their existing homes. So you take all that combined, it drove prices down because of the amount of product that was available. And the only way people could move the homes then was to drop the prices below what everybody else was charging. And a lot of people were in trouble financially, so they were dropping drastically. That's what happened before. We don't have that abundance of product now, so we're not going to have that kind of correction that was happening before. So there's not any kind of real risk with regard to holding money, right? Holding real estate right now with regard to the cost of money. But the big thing, and I'm glad you brought it up, the depreciation on a regular investment's 27 and a half years or 39, I mean, or and 39 and a half years for commercial, but the cost segregation piece is massive. And for the folks that are listening that don't really know anything about it, there's a couple ways to apply it. On the commercial side, and I'll get to it on my side because this is where it makes the most difference. If you have an office building and a tenant turns over and the next tenant needs a completely different layout and you're demoing everything that's inside the building, separate from the depreciation value of the building itself, that goes out 39 and a half years, the product that you took out of the building still had depreciation life on it. So let's say that a building was renovated for a tenant in 2015. It has a 39 and a half year depreciation on those improvements. If in 2025, the tenant moves out, you've got a 10-year schedule that's depreciated a portion of it, but the rest of the depreciation on the stuff you're demoing has value. You can take all that at once. It is a massive savings when you're dealing with large products. From the residential standpoint, it makes the most sense when you can compile it all at once and do it across the board at once. Because the cost of the segregation study is cost prohibitive when you're doing it for a single house at a time. When you can do it across, let's say you've bought 100 properties, and you can go back and do the cost segregation on everything. And you can only do this until the IRS audits you. Once they've audited you, you can't go back for it anymore. You can go back and have a cost segregation of all the stuff that you did, all the demolition that you did, all the products that you tore out of it and just threw away. They can go back and get you the depreciated value that's left on their life. So as an example, for a house, if you doubled it in size and you ripped out the HVAC systems and had to double the size of the septic system because it was on a septic instead of something else, those systems aren't large enough for the new facility, but they still had life on them as they were when you tear them out and put them back. According to the new thing, their depreciation value starts over on residential for 27 and a half years, commercial 39 and a half. So you can take all the value of what was left on their segregation on their depreciation schedule and take that in one lump sum. And if you do that across a bunch of properties at once on a residential, if you do that specifically in a year, you know you're going to take high returns. You have high margins. You're going to have high tax returns. If you do it in that year, you can offset it almost completely, if not get more money back. It's a massive play that nobody teaches and nobody talks about.
Yeah, 100%. What about you, Brad? What are you seeing in the market? Is there anything that you're concerned about, or anything you're pivoting on with kind of the market the way it is?
I agree. I agree with Mark that I don't think there's any kind of crash imminent. I think if that was true, we would be seeing a lot of foreclosures because you're going to have to have a lot of distressed property in order to drive prices down. There's also a lot of equity still in houses, so people don't have to sell like they did last time. I think the main risk is just there's just not the frenzy that was around back in 2021. So it's more just time on market, and there's also pockets like in Florida. We deal with the the condominiums with the HOA. Some of those are not in style right now. So you just have to know what you're buying and know if there's demand there, and be able to be selective about that. Get a good product, it's going to sell, especially if it's fixed up. One thing we were also noticing is Sorry, I got my dog here. He complains when I'm on a Zoom call. One thing we're noticing is back in 21, you could sell anything, even if it was distressed, to basically anybody. Now the fixed up stuff is where the demand is. So if you're a flipper and you're going to go in and fix it up, you're going to be able to sell it, where wholesaling may not work quite as well. So yeah.
And I feel I feel like you have to fix them up nicer too and stage them, to sell them better. But yeah, adjusting for time on the market is definitely a big thing.
So I can add one more thing with regard to the commercial side. There's a market shift that's coming, much like it did for residential when they had all the bankruptcies before, because back in 2020, 21, and 22, the Fed was giving rates to the banks for the purposes of commercial loans between 2% and down to minus 0.25%. There was a time they were literally paying banks to take money.
Wow, I didn't realize that.
Those loans were only good for 5 years, which means the stuff that was given out in 2020 is coming due this year. So the big institutional people that are sophisticated enough and solvent enough, they plan for this stuff. They've either already unloaded it, they've already refinanced it, or they're selling it or whatever. But a lot of people that were residential, beginning commercial people, they got in with great rates, and they're not sophisticated enough to look far enough ahead that the bankruptcy rates, the foreclosure rates on commercial properties are starting to scale. And when you look at the general ledger of the national banks, they will tell you that foreclosures are under, 1-2% across the board. However, when you go into those banks' individual subsets and you look at multifamilies and you look at office and you look at this, some of those categories are 20 to 30% defaults right now.
Oh, wow.
And it's just getting started. So there's going to be a tremendous opportunity over the next 3 to 4 years for folks that want to get into commercial real estate. The time's coming for that.
Wow. Sounds like some good opportunity for people who have some cash saved up. So,
right.
All right, guys. Well, hey, I appreciate your time. This was good combo. We got a lot of different perspectives from different sides of it, from commercial to residential to all kinds of different spectrums of business. So thanks, guys. We appreciate your time. And if you guys want to join us, we do this every couple weeks. Email me at tony@prohomebuyer.com if you don't have access. And we hope to see you guys soon. So Mark, Brad, we'll connect with you guys later. I appreciate it.
Thank you.
Take care. Thanks for having me on.
See you guys. Thanks.
Pleasure meeting you.